Good morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Thursday, April 16th, 2026, and we're seeing some interesting market dynamics this morning. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. Well, the dominant story continues to be the geopolitical developments with Iran. We're seeing stock market futures holding near all-time highs on peace hopes, with Trump suggesting the Iran war is very close to over and predicting the stock market is going to boom. This optimism is driving significant momentum in the indices, with the Nasdaq logging its longest winning streak since 2021. But what's particularly interesting is how oil is responding. We're seeing oil hold losses on the prospect of fresh peace talks, even with Hormuz shut. This tells me the market is pricing in a relatively quick resolution, which could ease inflationary pressures on energy costs. Meanwhile, we're getting strong earnings from the financials. Morgan Stanley just reported that their stock traders saw a record-breaking quarter, with trading revenue exceeding expectations by $1 billion. Bank of America also topped estimates, with CEO Brian Moynihan saying consumer banking is healthy and the US economy looks resilient. This is providing solid fundamental support beneath the rally.
That's a significant development with the peace talks. How are you reading the market's interpretation of these events?
The market seems to be taking a cautiously optimistic stance. What we're seeing is selective strength rather than broad-based euphoria. The major indexes are approaching what some analysts are calling overbought territory after this swift rally, which means we could see some consolidation or profit-taking in the near term, but the underlying sentiment remains constructive. The fact that we're seeing record highs in the Nasdaq and S&P 500 while Bitcoin is tapping $75,000 tells me there's genuine risk appetite returning to the market. However, traders need to be aware that we're testing important resistance levels. One analyst from CryptoQuant noted that major stock market indexes are near overbought territory, which historically precedes short-term pullbacks. The key is whether the positive news flow can sustain this momentum or if we'll see a healthy correction.
What does this mean for traders looking at the major indices today?
From a technical perspective, the S&P 500 is trading at record highs with strong institutional support from the banking sector earnings. The index is showing resilience, but traders should watch for any signs of exhaustion at these elevated levels. Volume has been decent, which validates the move, but we need to see continued participation. For the Nasdaq, we're seeing the longest winning streak since 2021, driven primarily by tech stocks. This is a bullish signal, but it also means the index is extended in the short term. I'd be watching for a potential retest of support levels before adding new long positions. The Dow is benefiting from the financial sector strength, with Bank of America and Morgan Stanley providing leadership. The industrial average is showing steady gains, though it's lagging the tech-heavy Nasdaq. Overall, the bias remains to the upside, but risk management is critical at these levels. Traders might consider taking partial profits on extended positions and waiting for pullbacks to add exposure.
That selectivity is going to be key for navigating these levels. Steve, let's get into the economic numbers. What's the picture looking like from the data side?
Thanks, Robert. Earlier this week, we got some important releases that are worth noting. On Tuesday, April 14th, we saw the Producer Price Index come in at 0.5%, which was actually below the forecast of 1.1%, and matched the previous reading of 0.5%. This was a positive development for inflation watchers, suggesting that producer-level price pressures are moderating. We also got existing home sales on April 13th, which came in at 3.98 million units, missing the forecast of 4.06 million and down from the previous 4.13 million. This indicates continued softness in the housing market, likely due to elevated mortgage rates. Now, turning to today's releases, we have two important indicators. Initial jobless claims is the first one, and this measures the number of people filing for unemployment benefits for the first time. The forecast is coming in, and we'll be watching to see if it aligns with the previous reading of 219,000. This is a key gauge of labor market health, and any significant deviation from expectations could move markets. The second release today is industrial production, which measures output from manufacturing, mining, and utilities sectors. The forecast stands against a previous reading of 1.4%. This indicator is particularly important for assessing the strength of the manufacturing sector and has implications for industrial stocks, materials, and energy companies. Looking ahead to the rest of the week, we don't have any major releases scheduled, which means today's data will set the tone for how traders position heading into next week.
Those numbers on PPI were encouraging, Lizzie. Let's shift to crypto. What are you seeing in the digital asset markets?
The crypto market is showing solid strength, particularly in Bitcoin. We're seeing BTC testing the $75,000 level, which is significant because this was the resistance that capped the rally back in January. The sentiment is decidedly bullish right now, driven by several factors. First, institutional flows are strong. Morgan Stanley just launched a Bitcoin fund that's already overtaken WisdomTree after just 6 trading days, securing $103 million in net inflows. Tether also added $70 million in Bitcoin to their reserves, bringing their holdings above 97,000 BTC. This institutional accumulation is providing a solid floor under prices. On the retail side, we're seeing renewed interest as well, with Bitcoin ETF inflows rising amid the US-Iran ceasefire hopes. The big question is whether Bitcoin can reclaim the $80,000 level. There's some near-term selling pressure, with traders cashing out about 63,000 BTC in profit after the rally above 76,000. But funding rates have hit their most negative levels since 2023, which historically suggests a bottom is in. For Ethereum, the picture is even more interesting. The ETH to BTC ratio just hit a 10-week high, meaning Ethereum is outpacing Bitcoin in performance. We're seeing a 26% increase in Ether open interest, which indicates renewed trader interest in the asset. This suggests that if the rally continues, Ethereum could be positioned to set new all-time highs for Solana. The outlook is more neutral. We're not seeing the same level of headline-grabbing developments, though there was some political news with a Solana Policy Institute-backed PAC spending millions on political campaigns. Solana will likely track the broader crypto market trends, but it's not showing the same leadership as Bitcoin and Ethereum right now.
Well, that wraps up today's Morning Bell. We've covered the Peace Talk optimism driving equities, strong bank earnings providing fundamental support, moderating inflation data, and the continued strength in crypto markets. Remember, do your own research and consult with financial advisors before making investment decisions. If you found today's discussion valuable, please subscribe to the Morning Bell and join us tomorrow for another market update. I'm Robert, along with Lizzie and Steve. Thanks for listening.